Hello again, everybody. This is Matador from freetradingvideos.com. Wanted to talk about a trade. I'm a little apprehensive to talk about actually, because I know some people got hurt in this trade when it gapped up. But it was a very nice day trade, so I wanted to bring it up as a potential future type of strategy for you. I put a post up into our website, again, freetradingvideos.com, in the forum. 30-minute gap strategy worked out very well on First Solar here. The night before, of course, it was way down here. It gapped all the way up in the morning, so it was a huge gap up. I saw that gap, and again, not so nice to be on the wrong side of that, of course, but that's not the point of this video. The point is, how do you capitalize on this kind of opportunity? Gaps, again, they represent fear, represent energy. So the first thing I have to do is understand where the stock is gapping up into. So if I'm looking at an intraday chart like I am here, this little 5-minute chart, I'll simply go back out, look at 3 months, 6 months of data. All right, and Thinkorswim does a very nice job of this as well. And so that stock was gapping up right into this area. So nice little symmetrical triangle here. Kind of fell off a cliff right there, so I can zoom in now with confidence, knowing what's above me, what's below me. It's gapping right up into the face of the 50 MA, which is sort of starting to roll over at this point. And I say, all right, well, there's my overhead resistance. So I go put about 30 days of 30-minute data, doesn't matter. I can zoom in, and there's my symmetrical triangle that had been drawn in before, and there's a gap in here. Not at all rare for a stock to run up into a gap like this and have trouble. So I put a line in here, round number of 220. There's also a gap completely filled would be up here. So 225 area would also be troublesome for this stock. So I can put a line in that area as well. Even before we've put the trade on here, we never know if we're going to get filled on this strategy. So all the people who are long up in here, who get hurt when the stock heads south, are now going to want to get out when the stock comes back if they held through that. It's a disaster. So that's a gift to them if the market can come all the way back, and that's why overhead resistance exists in the form of selling from people who previously got hurt. Alright, so let's go and zoom in now. Alright, so I know where everything is. I can now look and fine-tune this. So here's a little 5-minute chart. 30 days would look exactly the same. I can zoom in over here. And let's look at, again, what that looked like as it was setting up. So here is the morning. Opened way up here, just below our 220 number, which we had identified as resistance, and the declining 50 MA on the daily chart. Sells off a little bit, and all I do is I simply watch this stock for 30 minutes. So there's 5, 10, 15, 20, 25, 30 minutes. The stock traded. I simply mark the high right up in here. Very good. If the stock ever takes out the high of that bar, I'll look to get into that stock and put a protective stop below the low, wherever the low is, up to the time of that day. So sometimes the low might be here. Maybe the market would sell off a little bit, kind of rally back up, and then a low would be down here. So I have to kind of stalk this thing. But I simply put an alarm on. If it ever takes out the high, I define where the stop and entry are going to be, find out how many points that is, decide how many shares I want to own, decide how much risk that will be as a function of my overall account before I ever pull the trigger on this trade, and make sure I have a good 2-to-1 reward ratio based on a longer term time frame if I'm going to trade it as a swing trade. So I could use this strategy to enter a swing trade with a more technical entry intraday. So let's see what happened. Alright, sold off a little bit, so I'm still not filled. Every 5-minute bar that goes by, still not filled there, and I actually had my order in at 216.05 by 216.20. The high of the bar, the highest high was 215.95. So I actually forced it past the round number of 216 before I got into this thing. Still hadn't been filled there, and right in this trade, the high of that was 216.53. So during that bar, I got filled. I immediately put my protective stop below the low of this bar. That's the low of the day up to that point, right? This strategy is outlined nicely again in our forum. You can go and check it out. There it is. So there's a stop, and I simply ride this stock. So I have to sit through 1, 2, 3, 4 bars of sideways chop. So 20 minutes of sideways action. Anything could have happened. It could have gone down and stopped me out. Pretty sizable stop there. It's almost a 10-point stop. And so all I did was lighten up my shares a little bit. because the number of shares you have multiplied by the distance between your stop and entry, of course, is your dollar risk. Divide that by your overall account. That will be your percent at risk. And you just ride this thing and try to get as much out of as you can. There's the 220 mark from before. Stalls there just briefly. Broke out of that on returning volume. Makes a lot of sense. And this thing is just a monster already. So let's see, 223.39 is where I exited the stock on the first half of that. So it was not there yet. And I just wrote it up. Nice higher highs, higher lows. I believe it was right there. Yep, somewhere in this area. Yep, right there on that bar. I exited half my shares. So I'm out of half. I've moved my stop not all the way up, but underneath this low high. This higher swing low right there. And it made a lot of sense. I wanted to give this stock a lot of room to run because I'm actually trying to hold the other half of it and be in First Solar here for quite some time if I can. And this stock just delivered a nice gain. So there's the other part of that completely filled gap from roughly 30 days ago. It stalls there as well. Runs up. The 50 MA comes up as support. And ended up breaking out of that gently. There he goes. And that doesn't look like much, but that is a very, very nice day trade. That was on the first half of that trade. That was a 7.24 point run up. Very nice day trade. And the other half of that I'm riding. It is now gapped up this morning even. Last I looked it was 232.50. It's down a little bit off that now. But that's another 16.35 points on the other half of that. Of course, anything can happen. It could gap up, fill the gap, but again, I'm trying to be in this for the longer term, so even if it gaps up and completely fails, I'm going to move my stop up a little bit more now this morning, and I will be protecting the other half of that trade. It's still a very, very nice day trade. Great percentage to make in one day, and that's off that gap strategy. So I hope you guys enjoy reading about that in the forum, and if you have any questions about it, you can post a question, and me or one of the other analysts in our website will get back to you in a timely manner. And hope you guys have a great Valentine's Day, and I'll talk to you soon.